I will now quickly take the last presenter, who doesn't need any introduction, Mr. Bismack Rowani. Again, I'll be very tough on time.
I stand on all existing protocols. First of all, this paper is titled The Fulcrum of the Nigerian Economy, Agriculture. And I'm going to take the first 2 minutes to put some context into this discussion. Then I'll go to the paper itself, where I'll talk about how the Nigerian economy is going to perform in the next 12 to 18 months. And basically, this is to provoke thought. It's not a written rule. And everybody is going to leave here with a different interpretation of what economics and macroeconomics in Nigeria means. So no solid answers, but just thoughts you have to think about. But first and foremost, let me say something. One is that economics is not only a numeric science, a behavioral science. What I mean is that I can tell you all the numbers that this is high, that is this, and that is that. But the most important thing is that people must be happy, and it's welfare. So Nollywood is the fastest growing industry in this country, and people act a lot in this country. But one of the most difficult things to pretend and act is you cannot pretend to be happy if you are not happy. Okay? So I think I want to make that clear. So prosperity cannot be disguised. If you are happy, it's there. If you are unhappy, it will show. Now, the other thing is that change is as constant as every other thing. But economic change is more involuntary than voluntary. Almost all constructive and functional change is born out of crisis. And so if you go back to the Nigerian history and say what has happened, the first meaningful change was born out of crisis, the Civil War, the introduction of exchange control in Nigeria, the introduction of the first savings bond by Chief Awolowo during the Civil War. Nigerians were compelled to deduct a certain amount of their salary every month. And that was what was used to fund the Civil War. Then, after the Civil War, there was a crisis, and we came up with what they call the 3 R's: reconciliation, reconstruction, and rehabilitation. In 1974, we had another crisis, the crisis of too much money, when the oil price went up by 4, and that created another set of behavioral changes, both at the policy level and at the consumer level. In 1978, when the price of oil dropped so sharply, for the first time in Nigeria's history, Nigeria went to the international markets to go and borrow money, $1 billion to complete all the projects we have here now. The Ring Road, the second mainland bridge, the ports, the airlines, and all of these projects. $1 billion. I was called upon by BBC a couple of days ago to talk about the Niger Bridge, and I looked at the Niger Bridge. The Niger Bridge was built, the first Niger Bridge, the one you have there, was built by Dumez in 1965, completed in 65 with £5 million. When I did the conversion and I used the projection, the total cost of that bridge was about 2 billion naira. It's being launched today at 117 billion naira. It's just to put some context into what it is. Now, in 1985, Nigeria was confronted with another crisis and adopted what you call the Structural Adjustment Program. In 1995, Nigeria was confronted with a major crisis. It had to fund the LNG project, which is Nigeria's most significant and successful investment today. And 2 days to the signing arrangement, unfortunately, Sarawiwa was executed and the international markets pulled out of that. Nigeria had to cough up from its $5 billion of reserves, had to pay $3 billion out as seed capital for that project. Again, another policy change born out of crisis. So, in other words, crisis is the product or is the catalyst for change. Not all change is positive, but that is the thing. Now, why am I saying this? I'm saying this because today, Nigeria is talking about agriculture, and we say agriculture is the fulcrum. The fulcrum is, you know what a seesaw is when you have 2 kids on a seesaw. The fulcrum is at the middle. Whichever way you move the fulcrum will determine who wins. So Nigeria has two people sitting on the seesaw. One is produce wealth, which is agriculture, and the other one is natural wealth, which is you extract where you don't have to work. Wherever you move the fulcrum to will determine the outcome. So agriculture will be the fulcrum that will determine what the outcome is going to be. But what is the crisis that is going to drive the Nigerian macroeconomic change? The crisis, which is inevitable, is going to be the declining price of oil as well as the leakage of oil from the system. In economics, we have injections and leakages. Once the leakages are higher than the injections, you'll see, I heard the governor talking today on channels about, oh, money is missing, that is that, that is that. All of that is what we aggregate and call that leakages. Injections have a positive multiplier, leakages have a negative multiplier. So economic outcomes are a function of three major things, and this audience is made up of policymakers. The three things that drive economic outcomes are policies, leadership, and institutions. Unfortunately, one is, if you get two of them, you will get positive outcomes. If you get any other two, you will have negative outcomes. In other words, even if you have a strong leadership and strong, good policies, and if you have weak institutions, the outcome is negative. If you have weak leadership, good policies, and strong institutions, the outcome is positive. In any 3x3 matrix, if you have weak institutions, the outcome is negative. So even if you bring Lee Kuan Yew from heaven to come, or from wherever it is, to come and run Nigeria, and you put all the policies there, if you have weak institutions, you end up with negative outcomes. So let us start now by going through what's the threat of declining oil prices. This is what you see here. If oil prices decline to this level, you're going to see some changes that will take place. You will have three levels of adjustments. First of all, monetary adjustment, which means you deal with the exchange rate, you deal with the interest rates and all that. Those are initial. The next set of adjustments, when it falls below a particular level, will be fiscal adjustments, where you have to defer spending, borrow a little bit more, and then the final adjustment, when it falls below a particular point, you have structural adjustments. But then let's ask ourselves, what's the probability that if there's a 20% drop in the price of oil and production falls to 1.7 million barrels, what is going to happen? What's going to happen is that GDP growth will decline, government revenue will decline by almost 27%, your monthly FAC and all of that. Your external reserves would deplete in the long run by about $15 billion, and your exchange rate would depreciate by at least 5%. So all of these things will lead to certain changes. But let us stop first and ask ourselves, economies move from imperfection towards perfection, always in transition. And what does that mean? There are three major subsidies in Nigeria. When you talk about subsidy, people talk about petrol subsidy and all that. The reality is that the major subsidies in this country, and you can quantify them, are one, the exchange rate subsidy. If the market rate of the exchange is 172 and you're selling at 155, then you have about a 12 to 15 naira subsidy on every dollar. If you're doing $40 billion, you're talking about 1 trillion naira a year as subsidy on the exchange rate. You have subsidy on petroleum consumption products, which comes to almost maybe about 1.something trillion naira. Then you have another subsidy, which is government deposits. The central bank uses about 360 billion naira or so to pay for OMO, that is mopping up money after the excess liquidity are coming to the system. If you take all of these subsidies away from the system, you'll find that the economy moves towards total equilibrium. Unfortunately, political expediency and economic reality are different, and you cannot do certain things in an electoral cycle. The five vulnerable currencies in the world today are economies that are moving towards elections, and that's the unsustainable part of democracy, but we'll leave that for now. But the reality is that this thing calls for adjustments, and those adjustments, whether we like it or not, will benefit the people in the long run and benefit the states. Let us take, for example, if you were to eliminate the subsidy on petroleum products and substitute it with something else, say health, you shift it from consumption subsidies to production subsidies. What will happen is that the federal government budget of 4.9 trillion naira, about another 1.7 or 2 trillion naira will increase, and the states will get more money. If you adjust the exchange rate by, let us say, 5%, it means that what you get as your state revenue and what you get as your federal revenue is you multiply this new exchange rate by the dollar amount and you get more. So all of these things lead to a major increase in government revenue. But the government revenue increase when there's a trust deficit, when the people do not believe that the government is delivering on their promises, becomes a real issue. So this is the picture as we see it. And so if oil prices drop, I've already dealt with that. Now this is this picture of the states of Nigeria. And you can see very clearly their statutory allocation. Total statutory allocation is state allocation is about 154 trillion or whatever it is, 154 billion, and the state, federal government gets 242 billion. And you go each state and you can find the figure here that Taraba state is 2.85 billion in a month, Yobe state is about 2.83, Lagos state is about 4.13, Delta state is about 23 or something like that. Now, so you can see the fault lines as how the states are, how much revenue they get, and I'm coming back to the internally generated revenue, which is another issue. But basically, you're asking yourself, what are the multiplier effects? Government revenue, investments by companies, and consumption by people. That is what drives it. Now, what's the outlook? Nigeria has a GDP of $305 billion. At the end of this month, the rebasing has been concluded. You will get a GDP of $425 billion. It will be the largest economy in Africa. But the reality is that when you wake up on the 1st of April, and it's not April 4, you have to ask yourself, they say your GDP per capita is now $2,700 as against $1,600 the previous day. Are you going to feel happier? So again, we don't want an April Fool GDP issue. We want a reality, okay? Now, you'll be the largest economy in Africa ahead of South Africa. But what is important? Your potential GDP is going at 10.6, while your real GDP is going at 6.8. Oil is 12.5% of GDP. Now, if your real GDP is 6.8 and your potential is 10.6, it means that you are producing suboptimally, right? And what are the fastest growing sectors here? Telecom, 24%, building and construction, 14%, hotels and restaurants, 13.6%, trade, 9%, agric, 5%. Informal economy is 35% of the GDP, and it's growing at a slower pace. So what are you going to do to increase this productivity and make people happy? In all of this, the income inequality, see, that's the GDP per capita, $1,699. We have 2% of the world, 2.43% of the world's population, but we produce only 0.18 of the world's output. In other words, we are what you call global parasites, okay? Now, your share of world investment is 0.44, and your share of exports is 0.52, while you have 2.43% of it. And 48.8 means that the higher this figure, if this figure is 1, it means that everybody has the same income. When there's high income inequality in a country, and then you go by regions, you'll find that the level of crime, kidnap and ransom, the level of dysfunctional behavior increases. Because you have to ask yourself, what makes people unhappy? Is it poverty? Is it inequality? Or is it lack of opportunity?